Good morning. It is May 15th, and welcome to the DecisionPoint Trading Room. My name is Erin Swenlin, and I am here with my father, Carl Swenlin, and we're going to get you all the charts and help you determine the trend of the market and get you ready for the week ahead. Dad, I know everything's been going well with you as far as I know.
Yes, it has.
All right. Well, let's go ahead and get this started. I'm going to pass the screen to you. Before I do that, though, let me let everybody know that if you want to get your questions and symbol requests taken care of, you'll need to put those in the Q&A box. The chat box is for you, and I do have a moderator in there, Fred, who is going to welcome everybody into the chat room and keep things going in there. So if you're interested in talking amongst yourselves, go on into that chat room. Just remember when you send a chat message that you need to use the drop-down menu above the chat to send it to everyone, not just to us, because we don't monitor the chat room. We're monitoring that Q&A box. All right. Without further ado, Dad, let's get it going.
All right. Good morning, everyone. I want to start out with a brief review of moving average crossovers. When you have the moving average summarizes price movement within a certain time frame. We use the 20-day moving average, 50-day, and the 200-day moving average. Now, we watch crossovers from the 20 and the 50. So 20 is the faster moving, so that's what we watch and see when it crosses. When crossovers happen, it's basically signaling a change of direction, a change of trend within that time frame. The 20-50 crossovers, we're looking at a short to medium term time frame. The 200-day moving average being crossed by the 50, like right here, for example, that is a signal of a more, it's a longer term. It's called a golden cross when it goes up through the 200, and when it goes back down through the 200, it's called a death cross. Those are not my names. It's been around for decades. We did start the idea of a silver cross for the 20. That's what we've named the 20-50 cross upside crossovers. The silver cross, and the downside crossover is we call it a dark cross. As I say, these crossovers signal a change in trend within that time frame. This is be short to intermediate. But notice we had the crossover, and then basically that was the end of any trend downward, and things turned around. This happens, being these are not infallible, but what we have done is we've summarized them on, we have the Golden Cross Index, which tells us how many golden crosses, the percentage of golden crosses in this case, the S&P 500, and the Silver Cross Index, which is the percentage of silver crosses within the S&P 500. And I worked this chart up on the weekend. It's I found it pretty revealing. We've got here's the S&P 500 SPY, which is cap weighted, and then we have the RSP, which is an equal weight version of the S&P 500. You'll notice that we made a slightly new high over, not a new high, we'll call it a higher high than this one over here. But note, we have a 31% exactly percent drop in the Silver Cross Index from this top and this top. This is an astoundingly bad reading. We look at the RSP, and we can see that it actually is being confirmed by the Silver Cross lower top, because it has a lower top. This is because with equal weighting, Apple which is the highest cap stock in the S&P 500, carries an equal weight with the lowest cap stock, whatever that is, in the S&P 500. So to me, we've got this the market inhales, exhales, exhales. And right now, it's in an exhale phase. Now, this is not, this is not absolutely certain that this is going to happen. But to me, the most likely event is going to be a decline. And with this kind of a divergence, I think it could be pretty severe. But if you notice, this is the last similar, we have a double top here and then a lower top, which we have here. Right, in this case, the lower top, this basically resulted in a pretty sharp decline. And again, I think that's what we're going to see. We don't have any other similar cases in this 6-year chart. And in one instance is certainly not any kind of a record. So we have to be careful of how much faith we have in any of these things. But right at this moment, I would say this tells us we're going to get a sharp decline. Okay, let's look back to SPY, and what we've got. This is a 5-month trading range, and in the last 2 months, we've got a very much more narrow trading range. It's about 3.5%. Basically, waiting for something to happen to get it to break out of this range. Right now, again, we're expecting a downside breakout from this trading range. PMO is negative. We'll go with that for now.
Mm-hmm.
Looking at the dollar, we've got a breakout from this triangle formation, which could be bullish for the dollar. Let's look at a little longer term chart. Very long-term rise, declining trend line here. Lots of space, as Erin likes to complain about lines, but still, it's pretty reliable. And this breakout could mean that we'll see rising trend. Certainly, one has started. With a rising trend in the dollar, gold should be. Let's see. The dollar is up 0.21. Gold is down it's up 0.37. So it's basically relative strength versus the gold is really good at this point. Not astounding, but good. And gold is in a rising trend. Let me just get a longer term chart. Here we can see the rising trend. And let me just do it one more time on the weekly chart. Here I talk about both of these tops were very sharp parabolic moves. This is in 2020, that's 2022. This attempt to break through this is much more orderly. Let's say there's more work being done. Inhale, exhale, but moving higher. So gold could continue to move sideways till it hits this line and may dip down some to hit that line. But I think it's going to, this time, my expectation is it's going to break out finally. Been a long time waiting for that.
Mm-hmm.
USO, crude oil, it's in a 5-month trading range. And if we look at longer term chart, again, not much, it's been drifting downward. Right now, we've got a bottom above a bottom, and but we need to see a top exceeding this top before we can say that the trend has changed. Bonds, basically, the flat line is the weakest, so we would expect the bonds to break down. That's in the short term, at least. Here's yield array showing from the 1 month to the 30-year. And we've got good support at this level. Notice that 1 month is really flying high. I think this morning they were saying it's about 5.5% yield, but it sure moved up in a hurry. This is the 10-year Treasury yield, and it is, let me just verify, but it is higher right now, over 1%. The banking sector, that's the one I'm watching at the present time, which has the most interest to me, but we're getting some kind of a rally here, but not anything that I would be ready to invest in yet or trade in. Looking at the mega cap stocks, particularly Apple, let me just update that chart. You notice that we have this rising wedge, which basically is bearish, and it should resolve downward. What threw a wrench in that scenario is this is the day before it hit the earnings release, it hit the lower trend line, and after the earnings announcement, it bounced up pretty heavy, but it hasn't gotten above this resistance yet, and basically it hasn't escaped the rising wedge with a decisive move at this point. In fact, it keeps trying to. Right now, it's right about on this line. It's somewhat below this line. So I think maybe after it's all digested, that we're going to ultimately see it breaking down. Again, we've had this very long bullish move, 40% uptrend. Amazon around the bottom, a much different chart. Much different company than Apple, Microsoft, Google. Google rounded bottom. And again, it could be time for an exhale, but right now it's a very good looking chart. Native platforms possibly haven't gone as far as it's going to go for now before it moves back to, say, this trend line. Microsoft around the bottom, good looking chart. Netflix, completely different chart from the really big stocks, and it's breaking out of this triangle slightly. It's not complete yet. I didn't draw the rounded bottom, but it certainly we have it here. And again, a good looking chart. Problem would be we've got a PMO backing off, but it's basically because the rate of change, the rate of advance is slowing down. It's not necessarily over. And there's Tesla in a year and a half downtrend. And I think that would wrap it up for me, unless you think there's something else I should cover, Erin.
No, I think you covered everything. I think you left out Bitcoin. I know you you tend to do that.
Yeah, I do. Let me fix that. Bitcoin still a rounded top. Notice that it broke down below on Friday, broke down below this very important support level, but it closed right on it. And then we have Saturday and Sunday and now today, and it's moving higher again. So not decisive, but still around the top working against it. Looking at the longer term chart of Bitcoin, again, we've got very strong resistance at this level. Okay.
All right. There's a question in here for you from Neil. He says, why do you look at the SPY, then the SPX Silver Cross instead of the SPY Silver Cross?
Well, it's the same. The SPY consists of the same stocks as the SPX. So I call it the SPX Silver Cross because it is the S&P 500's Silver Cross. We use the SPY for trading because it is adjusted for dividends, whereas the S&P 500 chart is not. There is, if anybody was interested, there is a chart out there. There is a symbol, and I don't know what it is, but there is one version of the S&P 500 that is adjusted for dividends. But I just going to stay away from that because I think it would confuse too many people. So we use the SPY.
All right. That was one of the questions I remember I had when we got started in all of this. Okay. All right, I'm going to take control of the screen. It's time now. We're going to go and look at the sectors and some of the industry groups out there. Then I'm going to go ahead and start taking your symbol requests. Looks like we have quite a few of them. I've been trying to see if they are in any particular area, and it doesn't appear. They're all pretty mixed up as far as the different sectors, all those symbol requests. So we'll just be going down with those in order. Okay, so let me get this screen. So I'm going to start everybody off with an eye test. Make sure you're seeing this morning. This is the candle glance of all of these sectors, all on one page. And I do this because I really like to get a sense of the overall market, but split out into the sectors. And what I have on these charts are the PMO and the StockCharts Technical Rank. StockCharts Technical Rank is pretty interesting because it does tell you which of these sectors are really performing better than the others and the other ETFs. In fact, that's the universe that we compare these to. So I think that that's also interesting to look at. So let's start off by looking at that scooter value. Normally I don't do that, but I wanted to start with that as a way to kind of determine which ones we're going to dive in deep to. So first of all, Comm Services has a 98.6 rating, StockCharts Technical Rank. That's very good. That tells you that XLC's ETF is doing better based on trend and condition than over 98% of all ETFs. So it is very strong. Next one up would be technology, and it is at a 97.5 ranking. And then we also have staples, which have an 82.3% ranking. Notice that all of the others are well below the 50% threshold, and some of them really hurting, like financials, where you only have 8.3%, doing better than only about 8.3% of all ETFs. So financials certainly the weakest looking. We've talked about banks. It's rearing its ugly head again. I was seeing it in Seeking Alpha, which is one of the publications I read in the morning. And it's all of this is starting to come back into the picture. And there are a lot of worries out there, a lot of worries that probably aren't being discussed as well. So definitely be really careful if you're holding any financial positions, because as we saw before, and you can see on the XLF chart, when the banks started to have problems, everybody in the financial sector had problems. You can see didn't really affect a lot of others, but it really affected financials and it took everybody with it. So be very careful with those positions. So really the three that we need to concentrate on based on the StockCharts Technical Rank is Comm Services, consumer staples, and technology. So I'm going to go to our chart. So all of these under the hood indicator charts, you can see right now, this is the S&P, but you can see these are all of the charts that we have where you can get these under the hood indicators that I'm going to show you. All of these are available on our website. for subscribers. If you want to learn more about what we do, I recommend you come to our homepage, check out our video on that page, sign up for our free email list, and also check out the free material on our blogs and links page. This is where you're going to find the under the hood indicators. We're in the process of renaming these, so don't pay attention to that so much. But this is the list. That second list is where you're going to get all of these charts that I was showing you earlier.
And then some.
And then some, yes. So all of these. All right, so let's start off with comm services. And I will tell you, having studied these on Friday for my DecisionPoint Diamond subscribers, I always look for a sector to watch. And I'll give you the hint that comm services, I'll just tell you, comm services was the selection as sector to watch this week. It doesn't necessarily mean that it's going to shoot up there and do great. What it was is that of all of the sectors, comm services was the only one that had a rising PMO. And today we actually have a PMO buy signal happening right now. So comm services still looks okay on the surface, but when you get under the hood, it doesn't look so great. You've got these negative divergences that are in play right now on the OBV, on the Silver Cross Index. You can see that participation has been waning. We don't even have over 50% with price above their 20 and 50-day EMAs. And, stochastics look good and your relative strength looks good. But when I look at this kind of participation, particularly that Silver Cross Index, which is now on its fourth time, it looks like, of topping, certainly its third time topping beneath that signal line. So that is something that is not a good sign. We talked about the Silver Cross Index at the beginning of the program, and we don't like to see negative divergences, and we're seeing that on comm services. So while it is the healthier of all of the sectors, it's still not what I would say pile in and start investing here.
Right.
The other ones, be sure and interrupt me, know how I can go. He's laughing, it's true. Consumer staples was the other one with a high scooter. This was the second highest scooter. Actually, it was technology with the second highest scooter. So let's start there. All right, so technology certainly has been in a rising trend. It's been leading the market in most cases alongside comm services. But that PMO is really flat. It looks like it may be ready to rise today on this rally, but under the hood, we still have a lot of problems. Notice that we only have about 41% above their 20 and 50, and we don't even have 50% of them above their 200-day EMA. So there's still problems under the surface. Now, I would say, unlike comm services, at least this participation is more flat currently rather than angling lower. But overall, I would just be careful. But this one looks a little better under the surface than comm services, but certainly the PMO is not rising. So while, again, we have a rising trend, there are a lot of problems under the surface. And in fact, this has a very big, giant bearish rising wedge, which tells us to expect a breakdown. So again, more warning signs out there. Consumer staples was the final one with a scooter value above 50%. So this one has been really stuck under overhead resistance. Now, you might call this a flag because this looks like a flagpole and a flag. It could be a flag. The big problem is that with flag formations, you really need that flag to be angling downward. And in this case, it's really moving sideways. And those don't tend to resolve as a bull flag normally does. And we have problems going on. We have a PMO sell signal. We have a silver cross below its signal line and trending lower. The Golden Cross Index looks okay. I will give it that. But notice we are starting to see a little bit of a downswing here in participation. Now, unlike the other two we just looked at, we do have over 50%, in fact, over 64% with price above their 20, 50, and 200s. So under the hood, this one doesn't look quite as bad. But if you compare these percentages to the Silver Cross Index, they're lower. That means that the Silver Cross Index is probably going to continue to fall. And we don't want to see Silver Cross Indexes falling. That's generally a bad thing for price. So those are the three top sectors at this point. The question is, where's the strength in the industry groups? Well, there isn't a lot of strength in the industry groups either. Now, it wasn't to the point, I know that at one point when we were in the middle of the downswing, I went through and checked every industry group on StockCharts and found that none of them had a rising PMO. That is not the case here. There are some that do have rising PMOs. So let's go into those three sectors we looked at, since those are the stronger of the three, and we'll just click through and look at some of these industry groups and see if we can find some strength. All right, so what we're going to look for is rising PMOs, which we don't have here for media agencies, and a nice price pattern would be the best. So anyway, I'm going to stop if we have a rising PMO. Otherwise, I'm just going to click through. Okay, so internet does have a rising PMO. It has a nice rounded bottom going on here. This looks a lot like Google, and what was the other one? Amazon had a nice base. But Google had a nice base, and here you can see that nice base here on the internet index. So that looks okay. Publishing, we have a tick upward, but a price pattern that looks like a bugle. Those are bearish patterns because they suggest more and more volatility entering that particular stock or ETF, or in this case, industry group. And volatility is rarely our friend. And so we consider these bugle or broadening patterns to be bearish. All right, that's it. So internet, pretty much the only one looking good in comm services. Consumer staples, kind of maybe a rising PMO, but price pattern pretty much trading range, not doing much. Wow, food products, we're getting a negative crossover on the PMO. Not much here. So distillers and vintners have a rising PMO. So really not a lot to look at in consumer staples right now. And finally, let's look at technology. Electronic equipment is looking like it has a rising PMO. But I'm not liking this pattern. We have flat bottoms, declining tops. That is a bearish descending triangle, so not something we want to look at there. Nice rising trend going on in computer hardware. This would be your Apples of the world. And you can see that the PMO, though, is turning down, is flat. That's mainly because we have a steady rising trend. So I wouldn't read too much into this flat PMO, but it is twitchy. It's not really helping us out because of, as you were saying, Dad, I like that the inhale and exhale, exhale. That really hasn't helped out the PMO. That looks interesting. Telecom equipment. We have the PMO starting to rise and getting a little bit of a move here in price. But again, mostly sideways trading, and overhead resistance at the 200-day isn't too far away. Computer services are turning up right now. That looks interesting. Would like to see a breakout from that declining trend, but certainly that's looking up. Semiconductors moving sideways here on the PMO. Price has been really kind of narrowly trading here. You have price holding above that 50-day EMA mostly. I would say semis don't look terrible, but they don't look great to me. I think your upside potential might be limited here for semiconductors. Software, really flat PMO, but at least we have that, again, these rounded bottoms. That's a good basing pattern. And renewable energy really taking off. I was reading from the chat room last Friday, Fred. I can't remember the exact reasoning that was going on, but somebody was buying somebody else, I think. Oh, no, it was President Biden talking about basically about getting rid of fossil fuels again. And it kind of sparked a little bit of energy into renewable energy. So when you're looking at this, it tells you how weak things are, right? We saw these are the three strongest sectors. What did we find within? Not a lot. So this is another, just one more sign that we need to play defense and we need to be very careful. So with that, we're going to switch right on into those symbol requests, unless we did have any questions in there, Dad.
There is one. It's an excellent one. I'd like to take the screen back.
Absolutely.
Okay. Linda wants to know, what does adjusted for dividends mean vis-a-vis the SPY and the SPX? This is, as I say, a good question. And let me get a good chart to go with it. Okay, you'll notice on many of our charts, we have these little notations. And this basically is the dividend paid on the shares of SPY, okay, which is essentially dividends paid to stocks under the SP 500. This is, you get that as an overlay called events, and that's the one you use. Now, we say stock, we talk about dividends. What they are is a distribution. And let me back up to stock splits. When a stock is split, let's say for 2-for-1, they distribute additional shares of stock to stockholders. So a 2-for-1 means that if you have one share of stock, they're going to give you another share. So you'll have two where you had one. And that is a distribution. When you have a dividend, that is also a distribution. And when you have a stock split, we have to go back and adjust the data by dividing the data prior to the split by 2, right? No.
Yeah. Yeah.
2. Anyway, yes, basically, and you have to adjust that prior data, which if you didn't, you would have this great gap in the price between the current and future prices and the prior prices. So the same thing happens when they distribute a dividend. That's a distribution. And there's the same calculation that goes against the prior prices. It's a ratio. In other words, the percentage of the dividend they're giving stockholders cash, and that cash now comes out of the company, so it now belongs to the shareholders in their accounts, and it has to be taken out of the prior prices in order to keep the prices normal in relation to one another. So when you see these notations on the chart, that just tells us that there was a distribution, there was dividend paid, and the prior prices were adjusted by a fractional amount. It's basically, let's say it would be, let's say a 1/4%. So say you adjust prices back down by 1/4%. That's what happens.
I think you covered it.
Okay, good.
Yeah. All right. Sounds good. I know that a lot of people are curious about how that works. So I think that was a great discussion.
Yeah.
All right, let me grab the screen back. And let's hop into some of these symbol requests. The first one, guys, is going to take a little longer than the rest of them, just because I want to go over what I use in the chart and how we do this. And then we'll be able to fly on through the rest. So our first one is BASF. Okay, very good. It's actually a mid cap. Okay, so what we have on the chart is RSI. That tells me whether price is overbought or oversold. So that's that indicator. PMO measures momentum. OBV covers volume for us and what's happening. Stochastics are going to help me with whether the condition is, whether there's internal strength or not internal strength. And then I have relative strength. I look at the industry group that the stock is in to the SPY. Then I look at the stock to the SPY, and then I look at the stock to the industry group. This tells me right down here if I'm getting a leader within that industry group. So that's what I'm always looking for, rising movement out of this particular window, because that tells me that not only am I getting the stock possibly in a good sector or industry group, but I'm getting the best one within that industry group. So that covers everything you need: price, overbought, oversold, momentum, volume, internal strength, relative strength. So you have everything all on one chart. And the next thing we'll do after that is go over a 5-minute chart, but we're going to do that after I look at this. So first thing I do is I'm looking at support and resistance levels. So we've got resistance up here. How far away is price currently from that level? About 6%. So we have about 6% possibility of an up move before price actually hits stronger overhead resistance. The PMO, I don't like the way it is. It is ticking over. Currently, it's turning over, but it's ticked up. It's back on a buy signal. I wouldn't call this a surge. This seems more like a dead cat sort of bounce, in my opinion. We're kind of stuck here in this trading range. Like I said, the PMO is starting to turn over. We do have price isn't overbought, so that's a good thing. But internal strength is a little bit iffy with stochastics moving sideways. Relative strength, yes, we've got a really good contender within that group, but the group isn't doing that hot. It is helping BASF simply because it is doing well against the group, but that's why you want those stronger ones against the group, because then it can outperform the SPY. Overall, I'm not a fan of this. I think it would be a hold simply because you do have the 20 and 50-day EMAs holding up as support, but overall, I'm not super thrilled with the chart. It looks like a hold to me, not a buy. So the next thing up would be a 5-minute chart, but I'm not going to look at it on this one simply because it's not a buy to me. If we see a chart that's a buy, we're going to go over to that 5-minute candlestick and look at entries and exits. Next up, AI, it looks like. C3 AI. AI is getting a lot of interest right now. And this looks like a pretty good company to get involved with. It looks like, let's see, I think you had said something about earnings or something to that effect coming on right now. Well, what I can say is I see this cup with a nice little handle, and now we're getting that big rally off of it. It is like a 20% rally, so it's kind of hard to enter a stock when you're seeing that kind of a move. Personally, I would be waiting for the next day. I would want to see a little bit of a pullback so I could get in at a better price. Of course, sometimes that's not going to be possible, especially if you have something moving this quickly. You can see similar action here. But we also can see this big gap up move and then immediately following a pullback. That seems to be the character of this stock. Big parabolic moves, breakdown. That wasn't parabolic, that was just vertical. Breakdown, parabolic, breakdown. This is a little bit more constructive with this cup shaped and with the cup and handle. So I kind of like that. I like the breakout. My only issue here is that, man, it's going to be hard to get in it with a 20% move to the upside, but certainly plenty of upside potential. If it gets to the top of this trading range where it normally does, that's still another 30% move to the upside. So there's still some nice movement ready for this stock. So I like the stock. I think it's good. It's not where I would want to get in, but we can look at the 5-minute chart, because if you don't have time to wait around to get in, it might not be a bad time. All right, so on the 5-minute candlestick chart, what we're looking for an entry is a positive crossover by the PMO combined with a positive RSI. So for example, back here, the PMO crossover occurred, but the RSI was still negative. So that wouldn't have been your buy point. You would have been waiting, and then boom, RSI goes positive right in here. That's your buy point. Looks like that turned out to be a pretty good buy point. The sell points are easier than buy points. The sell point is basically as soon as you start losing momentum on a 5-minute chart. More than likely, if you're starting to see a PMO turnover on any chart, that's not a good time to be in. That's the time to get out. So that's exactly what we're looking for. So this would have gotten you in back here, and it would have gotten you out back in here. So that's why we use a 5-minute candlestick chart for our entries and exits. It's a way to improve it. It's a way to get caught up right at the beginning to make sure you're in at that best price. So I find this to be very helpful. So right now we're at a sell point because we do have that turning over. You can see the PMO on a sell signal now. RSI is very overbought. This tells me that more than likely we will see at least a pause, if nothing else, which would give you a possible entry. If today price does pull itself back, that would give you another entry. So you're watching for that PMO to turn back up. Now there are the conservative entries, which is that crossover positive RSI. Anything other than that, I consider an aggressive entry. Nothing wrong with aggressive entries, but just know that your risk level becomes a little higher, that your entry isn't as great as your entry might have been otherwise. You're risking that the PMO is going to turn down before it crosses over. All right, so that's it now on those. Let's go through and we're going to move it faster. And I see NVIDIA next. And you covered NVIDIA, so I'm not going to get too involved in it, but it's looking good. I mean, there's not much you can say that's bad about it. It's in a nice rising trend. The trend is softening up a little bit. We're starting to see a little bit more in the way of sideways movement, which does give me the sense that the upward move may be getting a little bit stale. PMO has topped numerous times here below its signal line, which is a bit of a problem for me. The PMO, though, is flat right now. I could see this easily as a hold. Really, I would be setting my stop. I know a lot of you probably own this one. If I had it, I'd be setting my stop. That's pretty deep there at a 10%, but depending on what you're holding as far as a profit, that could be an okay place to be. But other than that, I would say under that 20-day EMA, under these tops, that would be more of a 4.5% to 5%, which seems a little tight to me for NVIDIA too. So I'd probably be looking in that 6 to 8, maybe 8% range for a possible stop. But this looks like a good hold. I don't think that I'd be getting into NVIDIA until I had a crossover buy signal. Your volume's not on. No wonder. I was like, why isn't he giving me the symbols?
Excuse me, could you go down to the relative strength? Okay,
Right.
I just wanted to point out that the scales on the relative strength charts are useless. They're meaningless. So ignore them completely. They don't have any reference to anything else. You can't compare them to anything else.
Yeah, absolutely.
Basically, you're looking at the direction of the trend of the relative strength line. That's pretty much it.
Yep, exactly. And one thing to keep in mind with relative strength is, let's just say the industry group was really losing right now and it was moving lower. but you had the stock doing well and rising, relative strength rising. It's not rising because it's doing great. Okay. It's rising because it's doing better. And that means that it could be falling a little less fast, a little slower. So relative strength is really, it's all about direction, but we also have to keep in mind that it doesn't mean that the stock is necessarily on the rise. In this case, it is, but it doesn't always mean that.
Okay, BLDR.
Okay, BLDR. Okay, here we are. All right, well, we were talking relative strength. Certainly the group is showing a lot of relative strength in building materials. This stock is doing very well against the S&P and in fact, increasing its relative strength. And it's definitely a leader within that group. So not only do you have a good group, but you have a good stock within that group. So that's a great start. RSI is a bit on the overbought side. So that does say that right now, BLDR is overbought. But we've got really strong momentum still, although it is a bit on the overbought side as well. So I think we can all agree this is an overbought stock. Volume is confirming, so that's good. You can see lots of black volume bars here. With the OBV, every time you have an up day, you add the volume to the line, and every time you have a down day, you subtract the volume from the line. Notice it doesn't even have a scale. Because again, that is useless, really. We're just looking for negative divergences, positive divergences, confirmations like we're seeing here. Stochastics are above 80, which is where you want them. That says that there is internal strength. I'm also noticing today that we have a bullish engulfing candlestick. So everything looking very good on this chart. It would be a really tough entry for me, though, because it's already made all of this move to the upside, but it is starting to pause. And so it could be an entry point, but it's overbought. So for me, I wouldn't be necessarily entering this, or if I were, it would be a very short-term investment. It would be one that I want to keep a close eye on, particularly given what's going on in the market. But certainly having a good day. Looks like it could continue higher. As far as the 5-minute chart goes, our buy point arrived right about here. You should probably think, oh, that's where it was. No, it was not. This was an aggressive buy point because the RSI was not positive. Your risk was higher. Turns out that it was not a good time. When did we buy? It would be right here when the RSI went positive, right about there. So our buy point actually happened kind of right at the confirmation line of a little bit of a double bottom here, but that's about where it happened, right about there. And the sell point, the next sell point did come back in here. But honestly, I think I would have been waiting it out just simply because that PMO was doing so very well. And we were starting to get some interesting action in the morning. Sell point, though, for now hasn't come in. RSI very overbought. So if I were day trading this, I would wait for that PMO to turn over because I do think there's still more upside. But at a PMO turnover, I would probably sell just because the RSI is so overbought. Next.
SWAV.
Down 7% today. That's really taken that PMO into some trouble here with that big top beneath the signal line. I would say that is not a good sign. None of this looks good. This does look like a sell opportunity or a shorting opportunity if you got that breakdown below this level of support, but it is breaking the support level of the 20-day EMA. This is not a hold to me. This would be a sell for me or a possible short.
KRE.
KRE. Trying to move a little faster. I know we have a pretty good amount in here, so we'll get going with that. All right, so CRE, we did talk about that earlier, so I won't spend too much time on it, but if we're going to talk about it, we need the under the hood indicators. So I know, guys, I know you're salivating. I know you want to get into this because it has been beat down so low, but I'll tell you what, now that I'm starting to see more news items regarding the regional banks and the problems that are going on, I don't think that I would be trying to take advantage. Certainly the PMO is turning up, but we still have a declining trend. Really, that declining trend is still intact, I would say, certainly this one right here. I don't see any action under the hood, at least back here. When it started to rally a little bit, we were at least seeing some stocks get above their 20-day EMA. Right now, we're just not even having a heartbeat here. Flat line on the 50-day, flat line on stocks above the 200-day. I don't see this as a buying opportunity. Now, it could be a nice little short-term thing to get into, but like I said, seeing some of the news items I saw this morning, I wouldn't want to be here. And they're talking about, I don't know if you heard, Dad, they're talking about not allowing shorts on the regional banks for a little while. So that's some trouble ahead, guys. That is not what I'd be looking for in an investment.
XBI.
And we actually have that under the hood as well. It's IBB. So it's not XBI, it's IBB. I'll look at XBI, but let's just quickly look under the hood of the biotechs. Not looking too bad, honestly. Rising trend on these participation indicators, and the silver cross is moving while above its signal line. So I like the under the hood indicators here. Stochastic staying in positive territory. Let's look at XBI in particular, because I do know they trade a little bit differently. And honestly, of late, I've been finding XBI does better.
It's sideways.
Yes. Mostly sideways. Certainly right now, I like what it's doing. PMO is rising. The rising trend is intact. But we are getting to the top of that range. So excellent point to make. Stochastic still looking good. Volume pattern looking good. I like it. You can see relative strength is improving on XBI. I think this is one of the few areas, industry groups that do look healthy and healthy. I hate to use that when I'm talking about biotechs. So I like the chart. What's our upside potential though? If we get to the next level of overhead resistance, that's a little over 5% away. So that could be a nice little short-term trade. And maybe you're going to get a little bit more out of that. This does seem to be an area that people are liking during some decline. I find it interesting that this very volatile, risky in a way industry group is finding so much favor with the market flat. But it is. I like it. 5-minute chart. No buy point. Buy point came in yesterday or Friday. You don't want to wait until the PMO is at least turning up. I think you could go in aggressively if the PMO turns up, simply because the RSI is staying so positive. It got very overbought. We got the pullback, and now it's making the move. Looks like a flag formation. So I would watch for that PMO to turn up, and I think that'd be a great entry.
ALKS.
A little flaggish here. Looks like it got really too extended. RSI kind of got overbought here, and so we're getting a bit of a pause. Like I said, very flag-like. PMO still rising, even though we've had a little bit of decline going on here. Stochastic still looking good. Looks like a good choice within that industry group. I like the look of this one. It is staying above this resistance, that breakout point. So we got the breakout, mechanical pullback to the breakout point. So it does look like it's signing up to move a bit higher here. Pharma, though, I notice is starting to decrease its relative strength. This is okay for this one, simply because it is a leader within that group, but it's still something to keep in mind that that group is not doing so hot, or at least it doesn't look like it's going to be doing so hot. But I like the look.
ARY.
Yeah, 5-minute chart. Entry looks like it's here aggressively, very aggressively. Want to get an RSI positive, though, if possible. Renewable energy, we looked at that, one of the few industry groups doing well. Really nice rally. Hitting overhead resistance, this looks like the perfect place for it to pull back after having a really strong move. but I think this one will continue higher, but I would want to wait for that pullback to this level of support. This is an awfully strong move. It does need a little bit of pullback.
UPST.
Upstart Consumer Finance. So again, in the financial space, be very careful. Indicators are looking good. PMO now above the 0 line. Big bullish engulfing candlestick. This does look like it wants to continue higher. Stochastics tell us there's internal strength left. Looks pretty good to me. 5-minute chart. We're at a sell point. Overbought RSI, PMO turning over. So not a buy point. I don't think you're going to get a buy point today. So you'd want to put this in the watch list.
Just under 2 minutes.
All right.
GLEN.
Did see the, oh, nope, can't do it. It's not coming up as a symbol. So.
Okay. ANET.
All right. We got that one. All right. I never like to see these big gap downs like that because this becomes a big island. And that could be okay in this case because a reverse island would mean a gap back up. But usually when I see these big gap downs, it takes a while before it can enter the zone, trading zone it was in before. Don't like the PMO, don't like stochastics, RSI not looking good. I'm not a fan of this one. I think it's a hold. Certainly along that 200-day EMA, but if it's going to continue lower, I'd be looking for a breakdown here.
That's a reverse flag to me.
Yeah, absolutely. Not the kind of look you want.
ANET, about 40 seconds left.
That was ANDT. PayPal looks like was next. Again, financial stock, I would avoid it. Nothing good on this chart. I think this doesn't look like a buy. If anything, it's still in a short formation because the PMO is still falling quickly and stochastics are below 20.
There's a question on here for advanced decline line, which we'll get next week.
Yes.
No, next week. We're not on next week.
Oh, that's
Memorial Day.
Oh my goodness.
The next show we'll hit that.
Okay. Sounds like a plan. All right. Thanks for attending. If you like what we're doing here, we would definitely recommend you come check out our website at decisionpoint.com. We do run a free 2-week trial. Just use the coupon code DP trial and then the number 2. You'll get 2 free weeks to check out any of our products. And that's all I have for you. Good luck and good trading.